All right, can you guys let me know how the mic's working? All right, guys, we're going to get started in just a minute. I just want to do a mic test before we start. All right, perfect. All right, I'll give it another minute or so before we actually get started. For those, I guess, that are live. Someone's asking for a link. One sec. So I do have chat up for the live chat, and then I also have it on our Discord. It's probably going to be easier through our Discord. If you guys have any questions while we're going through this. But how is everything? Everything showing up properly? All right, perfect. All right, for those that aren't in Discord, just in case this gets out beyond our Discord reach, there's a link in my channel on my YouTube if you guys are interested in a free Discord room. It has a scanner, tons of profitable traders and knowledgeable people. So if you guys are into swings, penny stocks, mid caps, large caps, options, short selling, I mean, there's just a ton of information out here. Also an educational section, flashcards, resources, candlestick patterns, chart patterns. Then usually weekly we try and do a strategy session. I think from here on out, whenever I'm going to be doing it, and I think some of the other ones, some of the others in here, we'll try and do this on YouTube or record it in some way. We can go ahead and get started. A couple of things I want to go over. Let me pull it up real quick. So I want to talk through how to develop a strategy starting on Monday or starting over the weekend, something to set you up for the entire week. How to find and follow market trends, trending sectors such as weed or shippers or energy or oil or whatever it may be. Then at the opening bell, 9:30 a.m. Eastern Standard Time, the dip buy strategy. Then an in-depth look at penny stock patterns and how they react after a gap up. Generally, I'm going to be looking at like the sub 50-cent tickers that end up running to 70 cents, 80 cents pre-market, and basically how to trade them, because the patterns that these types of tickers actually trade in is just, it's extremely predictable in a lot of cases. So I want to cover that with you guys. And then gap fill stocks or gap down stocks and how to trade them. There's probably gonna be a couple other things I'll go through and I'll touch on. And if you guys have questions, can I explain my screen setup? What do you mean? This is the Thinkorswim. TD Ameritrade. If you guys start up an account with them, they give you Thinkorswim for free. So right now I've just got a whole bunch of charts up, and I'm gonna just have this that way I can, as I'm talking, because the previous strategy sessions that we've had, it's basically me, using the snipping tool and then posting a chart and then trying to, talk you guys through something. But here I've got the mouse, if you guys can see it, and I can just roll through and give you my insight on everything as it goes. So summer kind of sucked, honestly. We had, I think right around springtime, market kind of just tanked on us. And then from there, it's just been Mix of bullish market, bearish market, and mainly it's just been red. Everything's been bleeding. Now we're finally starting to get that volume and that momentum from traders out there that people are actually wanting to buy these stocks. You guys are seeing, multiple tickers, run into a halt each day rather than one time a week. And it's just each day you've got some massive runner, and our room's pretty much on top of. There's always someone in our room alerting out one of these tickers, and just the market overall. I mean, going into fall is going to get better and better, especially as shipper season comes up. And, for the newer traders, this is where you make a lot of your money. This is where you can, if you trade your strategy and your risk management, you guys have the potential to actually, increase your portfolio just exponentially. Give me 1 second. So, Syed, did I answer the screen setup? I guess we can get that out of the way before we actually start. Is it better now, voice? All right, I have the mic slightly away from my face. All right. I have a tendency to do that, just to move it out of the way to take a drink of water or something. So I'll try and stay on top of it. All right, so let's start off with a strategy, guys. Each day, each week, each month, each quarter, there's always going to be some type of trend that's going on. The length or the duration of it is heavily dependent on the way the market reacts. So one of the recent trends we had was the marijuana sector. We had IGC, TLRY, InBev, DTIA, TRPX. There's a ton of sympathies out there. There's a ton of cannabis related tickers, and for I don't know exactly what was it. Several weeks, I think, about a month maybe, that we had one of our IGC just took off from the under 50 cents up to up to $13, I think is where it got to. Let me see. But this was just one of the ones. Now it's on downtrend, and you're getting some of the other ones. We had a bit of a penny mania, and by that I mean like the sub-dollar tickers, and then crude oil was going up, so we had oil tickers and energy sympathies going off of that. So what I want to talk about, I guess, with developing your strategy is going to be finding out whatever the market trend of the week is going to be. And usually on Monday, Tuesday, and Wednesday, those are going to be the days where you can be most profitable following these market trends. So if we're going strictly on this week, we had, let me pull up some of the ones that ran this week. We had HSGX. Edge moved up off of 90 cents to 118. HSGX ran to 143. It's Ampy. Another one. Yeah, if you guys can remember any of the other ones, just go ahead and post them up in the Discord. My mind's kind of failing me right now. Ears. I think that was another one. No, not ears. I'm trying to find the ones that M&GA. That was one of them. So what I'm looking for is the ones, GTXI. Well, I'm strictly looking for in PTI. Yeah, I'm looking for the ones that are under $1, started in that 20 cents, anywhere from 10 to 40 cents, gapped up pre-market, either on news or just on a momentum trade, and gapped up to like the 60s or 70s. Because what I really want to touch on this, I'm going to touch on two of the things I have listed out in the description. How to trade them, and then the market trend and developing a strategy based on what you guys are seeing. All right, I'm going to take HSGX off because HSGX and then Edge and then Ogen. Those were the YOLO trades within the last week and a half that I called out that I'm just going to sit on. And Trav was the other one. So Trav, I think I want to talk about this one real quick. So with Trav, you guys can see it kind of setting up for all of last week, not just the last 5 days, but before that, it kept hitting the scans. And what I know of Trav from the past is that it's kind of pig heavy. It takes absolutely forever to do anything, and it never gets past a certain point. So let's look at this 10-day on here. You guys can see that right from that 78, 79 range right up to about 85, 86 is basically the channel that it tries to stay in. Ended up, I think, getting news at some point in time. Then finally broke over that, got some volume, hit 90s. I called it as a YOLO. I think, what I get, 875. And I think a lot of us got into 875 in the room. And what ended up happening was it goes up to about 92, 93, somewhere in that range. Hold on. And then came right back down. And I had a stop loss on my entry. This was my YOLO. So I don't know why I had a stop loss, knowing that it wasn't going to go down that far. I mean, this is where it trades. 78 was my risk. Then ended up going to 107 later in the day. This is a gap filler. So the trend that we had in the last week was if it has a gap, if it's a beat up bio or a therapeutics penny stock, that was part of the trend. And then if it was a sub 50 cent or sub $1, with a set amount of volume, and you just got to get all these factors lined up and just go from there with it. But anyways, let me go back here. HSGX was the other one that I had on there, but I strictly want to talk about, let's pull up MNGA. This is going to be one of the ones that I absolutely hate this stock. Like, I have like a love-hate for it, because I mean, it gets awesome news or something along those lines, ends up not doing shit. It just tanks on you. It's heavily diluted is what it feels like, and then out of nowhere just got that momentum in that market, broke through the resistance levels and ended up running to 73 cents. And I think this was pre-market, if I remember. Yeah, it was during pre-market. And for those of you that were on Voice, and I posted this on Stock Twits, because I mean, every single day we were having, an MNGA, it was CEI, it was EARS, it was, AGRX. It was just one of these pennies, and they all did the exact same thing at open. You see in the room like, oh, is it still good buy? It's 70 cents on the ask, 68 on the bid, and people are asking like, oh man, this thing's gonna run. I want to add here. Guys, don't. These pennies, the way that they work every single time, you see this right here, this 50, this is right where they bounce off every single time. This one acted a little bit differently, and I was even saying have a little bit more caution with this one, because for one, I don't like it. But what it allows you to do is it goes up to 70 from sub 40, and every single one of them that was sub 40 cents that ran over 70 ended up trading in the 60s until that opening bell hit, and then gapped down to like 58, 57, 56, and kind of sat there. And you would think, oh wow, this is the level where it's starting to change from selling pressure to buy pressure, and this is a time to buy. But it's not. Like, just wait for that low 50 to 52 range, and that's what I was telling people on Voice. And for everyone that jumped into it, you guys were able to sell. If I remember, this one went over 60s right after that, didn't it? So maybe it was right in this candle. It gapped down really quick, jumped right back up. I'm trying to remember how we traded this one. Hold on. But anyways, what was another one? EARS, I believe. No, not EARS. Not AGRX. No, I keep looking at the wrong ones here. Hold on, I got a list. No, not that one. Not here. All right, CEI. All right, here we go. Now remember, MNG, I think I just had the 5 minute candles on there, so it was within the first couple minutes. Hold on. So here's another one. This was, you guys are looking back, another 20-cent stock. Ended up gapping up the day prior. Kind of consolidated right here in the 40s and took off to 74. So this was another perfect example of, the market trend. You got these beat up stocks that are down here. And I think if we go back here, there might be a gap on this one. Yeah. So you got the gap here. If you go to StockTwits, obviously these people are going to say it's going to the moon. It's going to go to 350 or 340. It's going to make a new 6-month high, something ridiculous. Don't ever listen to those guys. Let's go back here. There, it was 10-day. Okay, so here is another perfect example. This is a 5-minute chart, I think. No, 30-minute chart. So this is the first 30 minutes after open. And you guys see this pattern right here that I just talked about with MNGA. We're up here, and you guys are looking over here, like where my mouse is, you guys can see we go right up here to 73, 74, right in that range. And if you guys remember MNGA, I think it was what, 73? And then after open, it was a high of 65. But right here, the very top of that candle, pre-market, right here is at 73. After market open, you guys can see the bottom here of this candle is going to be right there at 50 on the dot, like 5006 or right at 50. So if you guys are noticing these things, I mean, it was too easy. Every single day that we had one of these pennies, whether it was CEI, whether it was MNGA or all the other ones I can't remember, but every single day, I mean, I was making my first trade was anywhere from 10 to 25% of whatever I put in there. I mean, it's the easiest money that you guys can make if you notice these kind of trends. And so what I want to talk about is building that strategy and noticing what that market trend is. So whether it's going to be weed tickers or whether it's going to be the pennies or the energy or the shippers or whatever it may be, this is what you guys have to focus in on. Now, all the volume and all the big moves were on these kind of tickers in the pennies. You had GBR, you had SAEX, you had all the, over $1 tickers, PED, and all the other ones. They were moving as well, but you could make money on those ones. I'm not saying that, anyone giving alerts on those or anything else, or, trading those ones is bad by any means, because obviously there's a lot less risk, in something that's moving slower. But with the volatility, if you guys notice these kind of trends, you could actually just bank money. And I think with CEI, what we ended up doing, I took like 5 different entries in this, sold 5 different positions, and just kept building my core position. So, I take an entry here under 53, I think, on CEI, and it jumped off of 50. And then I think ran right back up somewhere over the 60s, or no, went to 74 right after that big dip. So that was, that's a 50% move, like 48% move right there. That you guys could have taken advantage of. Obviously, I didn't hold to 74, but whenever it's bouncing up and down, and then you come back here, once it breaks under that 40 range, that's where it's a lot more risky. But you normally get jumps off of either 46, 44, 42, or 40. If it hits 40, I just kind of wait and let it go under. No, it's just basically following a certain pattern, and I don't know why it is, whether it's, trader psychology or market manipulation or whatever it may be. But every single day there was a ticker doing the exact same thing. And if you guys noticed it, or if you listened whenever it was called out over voice, I mean, it just gave you the ability to just exponentially increase your account. I had an absolutely amazing week the last 2 weeks, and I think a lot of the ABio was another one, Sam Craig. I think a lot of the traders in our room did as well. This one trades a little bit different. This was already at 50. This was, I think, Stock Authority was calling ABio out for a good solid 2 weeks right off of 50. I think I ended up getting a pop here. Came right back down, retested down at the 50, 51, then ended up taking off. This got news, if I remember. No news. I think it was just a market momentum gap fill. AMDA. Yep. And some of these, I mean, you can use that same type of pattern. So you got AMDA. Let me go to ears. Is that the other one, I believe? Yeah, it keeps testing right here under 50. You guys can kind of see this kind of setup. Okay, so if you're looking right here on ears, let me go to 20-day. 27-cent low. And this is the other thing, guys. You can't know where you're going to go unless you're looking at the past on a lot of these charts. So you can see a whole bunch of gap downs here, gap down here. Tried to go back up. This was, I traded this one in the past. See the gap down from 61 cents. And this is what I'm looking at here. So whenever I'm looking at a gap, I'm not looking at it to go up here. I'm looking at pretty much the bottommost candle that I can see in like a certain period of time. So right here, we've got anywhere from, what is that, 43.84. It closed at 53.84. So you can kind of see that this is probably going to be a bit of the resistance level from this gap right here. I got my mouse that's not working. So from 40 to 53.84, we'll just say 40 to 54, that 14-cent gap right there. So moving forward, you guys can start seeing that. Oh my God. Well, this one didn't fill the gap at all, really. It's not filling it completely. So you're getting that psych barrier right around 50. It breaks over 50, goes 505, comes right back down. I feel like I'm getting way off topic, so let me get back on where I was at. 1 second, let me pull this up. Okay, so developing your strategy for the week. Monday and Tuesday. Monday specifically, you look at the scanner that we have that Static provides for the room. You look where the volume is in the market. You see what kind of tickers, what sectors, and where the most volume is based on those sectors, and then build a watch list off that. So let's say you see GBR moving and you see USO and crude oil prices spiking. Obviously, don't just look at GBR because it has the volume. Look at PED, look at CEI, look at HUSA, HUSA, and a lot of the other ones. And then build a watch list based off that. And this is a speculative watch list. So Monday is kind of just like that, getting a feel for what's going on in the market, seeing if there's continuation from the week prior when we had weed as a market trend. Mondays I always watched and saw what the weed tickers were doing. It kind of solidified what was going to happen on Tuesday. So this is where you build a strategy. You find that market trend. You do your due diligence, your homework on all these different tickers that are in certain sectors. If you think it's a therapeutics trend, if you think it's a penny mania trend, you see, what kind of pennies are running. Tuesday solidifies it and lets you know if there's going to be continuation. So let's say you've got AGRX, you've got Ogun going crazy, you've got a whole bunch of these, 40-cent tickers that are just going through the roof. So you start looking at why they're going up. You look at, okay, well, there's a gap on there. Okay, they're in the bio sector. And so you go off of those key indicators for that sector, and you kind of build this in your mind like, okay, well, let me go find another one that's a bio that has a gap and it's, sub 40 cents or sub 50 cents and kind of, see if there's any action starting on that. So rather than wait for someone out here to alert a stock, you guys should just do your homework on your own and, take the time out of your day. I mean, if you want that financial freedom and if you want that success, it starts with work. I mean, for me, at the point that I'm at now, I do my homework, but I don't have to do as much anymore. I can just strictly go off the scanner and follow momentum, follow the volume, and I can see, charts setting up prior to them, getting to the ascending triangle, prior to them getting to the flag. I can see this whole setup happening, and I can start taking these speculative entries like right here. This is obviously not an intraday chart, that not a 1 day. This is your 4 hour. But let's say that this was a 1 day, 1 minute. You can see how it's kind of starting to flag slightly here. So I could already see right here, okay, we're coming down. I could take a speculative entry right here. I could just sell right there if I wanted to, and then, see if it's going to actually come out. Yours doesn't look bad where it is now that I'm really looking at it, but this is on a longer term chart. So let me pull. Oh my God, my mouse. Yeah, it's probably going to pull back actually, looking at this. But anyways, so Monday and Tuesday, that's where you find out what the pattern is. Wednesday is where you can make some money also. After Wednesday, those are the 3 days, Monday, Tuesday, Wednesday. Those 3 days are where the most money should be made. There's potential for more money on Thursday and Friday, but be more cautious with those days. And this is a strategy that I have. Monday, find out what's going on. Tuesday, be more aggressive with these with whatever the trending sector is, and then Wednesday also making some money, and then Thursday and Friday trading with caution. It's just seeing where everything is going to play out. So opening bell, dip buy strategy. We went over the pennies. You can kind of start seeing based on history. You can see where the where these setups are and where the dip buy might be. So that's literally just going off of the psychology that if they go to 70 cents from, sub 40, you could pick it up off 50 and within a minute or two make 10, 15%. And, I mean, it's been ridiculous. Let's look at some of these other ones. What were some other ones that are going? Let's try and look at Friday so I can just look at a 1 minute chart. Actually, no, Ogun, we can look at it right here. So this one's a riskier trade. Let's see. You guys can see that this was down in the, it was 40s before, but this is down in the 50s and then just started taking off right here. Had a little bit of a consolidation period here, bounced up next day, and then you had the huge move, huge dip. What was this from? 3.5, 330 all the way down to $2. But where do I want to start? No. If I'm trading something that's over $1, I'm not looking for a dip that is 144 to 125. Yeah, I'm not looking for a 19-cent dip on something over $1. I mean, that is substantial, 15% or whatever. But I really like these kind of dips right here. 30-minute chart. All right, I gotta go on a 5-day, guys. I mean, this is gonna make it a lot easier for me. Here, someone list off some alt. Yeah. Alt's ridiculous, man. I think it had that offering down here. And I remember when it was breaking 5, I'm like, well, I know alt. I know what it's gonna it's just gonna run. But what program am I on? I'm on Thinkorswim for TD Ameritrade. What tickers do I have here? GTXI. We'll go off GTXI. Here's the thing. I'm trying to go off trades or tickers that I actually traded, but all through this last 2 weeks, I was strictly on pennies. I mean, I think I may have traded like one ticker above $1 each day. But, they didn't. It was just so much easier doing the pennies because, I mean, it was just perfect. Knowing exactly where they were going to bounce every single time. Let's see. Trying to think of one that had a lot of volume. See, there was no dip here. See, I'm looking for dip buys. I mean, because this one, just looking at it, you can see it's nice and steady. And this is another thing that you guys want to look for pre-market. If you got a steady gainer, okay, so we're right here at 97 cents. It broke over $1. This was the bad part here. I think that if you're looking down here, what's the volume? Yeah, 50,000 volume. And then followed by literally no volume. I'm actually surprised this held. It's literally like 2,000 volume, bringing it up another, 10 cents or so. But good part about it was this consolidation, and this is a 5 minute. These are all 5 minute candles, guys. But you can see that trading right here. You guys can see specifically right here at 120, it kept bouncing right off of 120 for a good solid hour and 20 minutes. So as long as it held right there, you should have gotten that spike. So that was just an easy play for anyone that actually took it. And I don't think I was watching P-Tide that day. So even with me just being on pennies, guys, I mean, there's tons of other opportunities. So let's say that you miss a move, the initial move on one of the pennies or on one of the ones on your watch list. You know, this is why you diversify and you're not just sticking strictly like I was to pennies. I was sticking to pennies because the percentage increase was exponential compared to some of these ones here. But you know, taking a long position here from 220 pre-market or 120 could have been solid all the way up to 299 high. And I know that our room was on that. I remember P-Tide being all over on the alerts and people talking about it. Okay, but I gotta find a good stock. Someone post up in Discord or post up in our chat here. One of the tickers that prime example INPX. I want to find this nice little cup and handle here. I want to find one that is InBev. InBev's good. This is market trending stock. Remember, there was a day where InBev and IGC had the exact same chart, 5 minute, 5 minute. This has been downtrending. We'll have to go to 10-day. And they kind of split off about 5 days ago. But now all this right here, which day was it? I think it was the last day. I don't remember. Anyways, so let's take a look at InBev here. Now, if I remember on this one, it had an offering also. And I don't know what's been going on lately, guys. All these tickers that are getting offerings, and I think it was right in this range here. So this would have been the 24th. Yeah, 50 million at market. That's on the 24th right here. So you kind of just sat in here, and then once it broke over that, it was just like, all right, screw you guys. I'm going to do my own thing. Let's go back to the 10-day. This is where it started going crazy. And with these weed tickers, these were acting a little bit differently. Sometimes there was a dip buy at open, other times there wasn't. But I'd say about 7 out of 10 times, and I'd probably say 9 out of 10 times, all these tickers that you guys see that have 1.2 million volume pre-market, or 3 million, or 500,000, or 250, whatever it may be, you guys are going to see at open there is a dip. Okay, see that red candle? Another red candle. It is every single morning. Like, that's already 4. Let's go back. All right, there's 5 right here. This is the 5th day. 6th day. This one wasn't that much of a dip. Okay, here's the exception here. And this is the other thing I'm gonna look at. This is on a 30-minute, right? So we have a 30-minute candle. Should probably just be looking at the 5-day. That way it'd be more accurate to what I'm trying to say. All right, so can I do a 1 minute 5-day? I can. We'll do 2 minutes. My God, it's gonna take forever to. So with the weed tickers, it was a little bit different. It's taking forever to scroll. You know, you'd have a whole bunch of buying pressure mixed with selling pressure right at open, but generally there'd be a dip. Okay. Now, my initial speculative entry, if I was going to take this, let me scroll out just slightly. I'm not going to just say, oh, it dipped, I'm going to buy. You guys are going to look back right here. You can see that. Let me draw some lines. Just an initial pivot point. If I was looking at it for buying pre-market, right there, you can see a resistance top here. And this is just, doing some charting right in the, I wish that this wasn't automatically red. And this is what you guys should be doing each morning. You should plot out, if you're looking at InBev, or if you're looking at IGC or IMPX or CRMD, whatever ticker you're looking at, you should chart out potential dip buy points, potential pivot points, whatever you see. Oops, a little bit lower. Sorry, this is taking a while. But you guys can already see, just by going off pre-market, you see this one right here, right at 649. If you come right over here, oh, a little bit high. That's same spot, basically 650, okay, as a potential bounce zone. So resistance point, you've got 772. You guys can see that there was initial resistance right here at that 772 range. That caused that pullback before it finally broke over that resistance level. So that was a bullish indicator and should show that there's going to be continuation. So just looking at it from here, and if you guys wait for some of these to, at the bottom of properties on those lines, you can click save as default. Oh, is that to actually change out the colors of the lines? Because if that is, dude, you just saved me so much time. Like, I hate red. I always try and make it green or yellow or gold or whatever it is, just because it's looks better. But this day right here is absolutely perfect. All right, after you make them the color style you want, yeah, just click save as default. Dude, thanks a lot, Hybrid Trader. Appreciate it. You guys can go all the way back to, where it was trading at before. What level is this? 671. All right, that's where, basically right there. That's different. Take that off. All right, so you just kind of plot out where these different pivot points are. So 670, basically 670. And you've got 650. 650, I like the 50s. With the weed tickers, they were actually doing 50-cent dips. Basically, that's where it'd be, stocks trading, trying to break $7, falls to 650. You take your speculative entry. As long as that 650 holds, you stay in. You retest at 7, it would go up from there. With the weed tickers, you can kind of notice those kind of patterns on that and just roll with it. But anyways, going into your dip buy right at open, you've got this initial pivot point. This was right at 7 o'clock in the morning. Decent amount of volume. Oh, I think there was decent. Hold on. Yeah, it was decent enough for pre-market. I mean, market trending stock. I think that each day InBev was probably opening up with over 1 million. Over 1 million volume, and these are 2-minute candles anyway. But like I said, guys, just wait for these setups, okay? Especially whenever something's moving up from there's 770, 650. That's a $1.20 move pre-market, and then coming right back down at open. So don't trade in this initial range on tickers over $1. I don't recommend it unless you have it charted out and you think that it's going to pivot here, and you just have that gut feeling. But I wouldn't go long on it. So what I do, if I take a dip buy, let's say I bought right off at this 690s range, right? I buy in 1,000 shares. It goes up right here, starts getting a little bit of resistance, 716. I take off, anywhere from 500 to 750 shares right there, and leave my 250 in down here. So whenever it comes here, and you guys can see, okay, you guys can see right in this range. Oh shit, where was that? So right here, we got a red candle, another one. I probably wouldn't have held right here, just because, yeah. I mean, as soon as it broke under here, this is where a lot of stops probably went out here. But no, let's say that I held my core position, 250 shares here. I sold 750 here over 720. Already made a decent amount of profit there. Then whenever it comes back down, I've got my next pivot point already charted. Okay, I would draw this line all the way across to right here, And then if it ever touched that on a big dip, such as right here, this would be my average down spot. And then what I could do, if let's say I think that it's turning, okay, that it's had its run, it's already done. This is 750. It's not going to run to 10. It's not going to do that. So my thought process is, okay, I need to get out of this thing. I've got 250 here, average down 500 here. Only have to get a quarter of the way or a third of the way up, 670 to actually break even with the shares there and the shares here. Or I could YOLO it and see if it actually comes all the way back up, and then use this this line here as the resistance level, which you guys can see right here. I'm just kind of following this line. I keep trying to point with my hands like you guys can see it. But you got 690 is where I got this line. You guys can see right here it's 697. You got VWAP, and you've also got top of this wick of this candle as your resistance, slight pullback, and then finally broke over. And this is what you need to look for. Old support, old pivot points become new resistance right here. And this is all probably pretty basic stuff that you guys already know, but if you chart this stuff out each morning and follow your strategy and follow your entries and don't get caught up with fear of missing out and be like, oh shit, you know, look at all this green, look at this green candle here, this 2-minute green candle, there's a ton of buying pressure, it's going to run. And then whenever it tanks right here, you're like, well, shit. And you end up selling somewhere in this range right here. Okay. Only for it to take another 15, 20 minutes and just go freaking parabolic throughout the rest of the day. So this is where a lot of traders fail in this first 15-minute window. And this is a perfect chart for it because, I mean, a lot of these tickers follow this exact same pattern where you get that rush of volume right here where it's, you know, 700,000 in that 2-minute span right there. This is a 700,000 candlestick and worth of volume. And they obviously just say, oh, well, let me buy this shit real quick. And then whenever it tanks, they end up panic selling, or, you know, their stop loss gets triggered, and just wait for the stuff to set up. You know, if you guys build your charts like this, and this is like prehistoric, this is like a child can do this. You know what I mean? And if it falls below this line right here, then just stay away from it. You know, it's probably going to downtrend, or wait for it to build a base. Let's see if a base built anywhere. You can see where it fell below VWAP. This was volatile throughout the day. And you can kind of see in this range here, it's starting to base out, but this is high volatility still because we're looking at 775 to 810. That's 35 cents. But you guys can see that if it's a market trending stock, there's potential for it to continue and have that continuation. But compared to, you know, here or here, there's a ton of risk buying it up here. You know what I mean? So, I mean, it's all about what you guys are willing to risk versus the reward that you guys are wanting in the end. You know, we had IGC at 49 cents. It ran 2,400%. Did I think that it was going to go 2,400? Hell no. Did I sell at $4? No, I sold, I think, different, I mean, a lot of it, I think I sold before $1. If I remember, I mean, I missed out on, you know, well into 6 figures on that trade, but I mean, I'm not sad about it. That happens every once in a while. I mean, if I held through every 40-cent ticker that I have, hoping for $10, I mean, I'd be sitting here for a long time, not making any money and not taking profits. What I like to stress, and a lot of people in the room, is to take base hits. You know, don't try and get a home run with every single trade that you guys have. Just build your account up. You know, I mean, if you're able to make 5% on a trade, or 10% or 15% on a trade, you know, 1 out of every 3 times, you can profit. Okay. So let's say that you have a 1 to 3 risk reward. You risk 5%. Okay. So 5% of whatever you put in, or whatever your entry price is. If the stock goes down 5%, you sell. You have a stop loss, a stop limit sell, whatever it is right there. And you stick to that. You lose 2 trades, losing 5% each time. You're down 10%, roughly. Then you get 1 trade where you make 15%, you're up 5%. Okay, that's 3-day trades. That's 3 trades in a week. You're up 5% in the week. You keep doing that every single week. It doesn't matter if you got a $100 account. It doesn't matter if you have a 5,000 or 5 million. I mean, it really doesn't matter. I mean, you're going to increase your account. but set your risk to reward based on your trade fees also. So let's say you only have a $100 account and you're paying $15 in commissions. Obviously, you're not going to get anywhere. It's if you're under a certain amount, I'd say like 3K or 4K, you are in probably the toughest position for increasing your account. You get over 5 to 7K, you can actually make hundreds on every trade compared to 10, 20, 30, 40, $50. But like I said, just stick to your base hits. Get that compounded growth, that exponential increase will happen. Like I can guarantee you guys, if you take these smart entries and you follow different strategies, like just chart everything out, make sure you have a plan before you enter and have a plan for when to exit. I don't like CCI. I'm just now reading through some of these some of the stuff you guys have on here. I mean, honestly, with what works for me, if I'm following momentum, okay, so if I'm following a stock that's getting 20 million volume in one day and going just ridiculously crazy, I'm it's good to have CCI, RSI, or VWAP, or EMAs, or SMAs, like all these different things on here. But I don't like to be too cluttered, man. Um, if I'm strictly trading, let's go back over to this little 5-day, these little 5-minute charts. But let's say I'm doing intraday with a 1 minute. Yeah, this is about to get really hectic. Oh my god. All right. Yeah, I mean, I can't even tell you an average of how many trades I take a day. And how many do I actually alert? Not even that many, to be honest. I mean, I know I alert a lot of different stocks. I hear something on the scanner. I may not take it personally, but I may throw it out there like, hey, RXII is on the scanner, or CCCR or CCCL. One of these is on scanner, or GLBS. It's a shipper. Shipper mania is kind of going on. I took an entry here. So, we'll give alerts out. And I know that we alert a ton of things on there, and it's literally just to kind of get the eyes, all your eyes on the market, and learn how some of these tickers run in sympathy to each other, how some of them act. It doesn't. One thing we definitely don't want, and I definitely don't want, is people just to be sheep and just to follow our trades. And I think that there's a lot of times if you guys just sit back and watch, like let's say I alert a stock, don't just jump into it without knowing anything about it. Like this is where doing your homework and doing your studying. If I start seeing a trend in there, I'm not just looking at, okay, InBev is running today. I'm looking at IGC. I'm looking at TLRY, TRPX, APD, and DTEA. You just look throughout the market. If it's shippers, you got PXS, you got GLBS, you've got D6 dries. What's the other one? E-dry. I mean, there's like I've got like a watch list for each one of these different sectors, and so this is where you guys have to start getting into. Start learning the pattern. Start learning the chart setup. Start learning these different sectors and the sympathies and how some of these run in conjunction with others and why they run in conjunction, and then how far they go, and also have your resistance points. And like, okay, well, I know going off of Trav, it has a lot of trouble right at 85 and 86. It's been hitting the scanners every day last week. Then finally broke through. That's why I was able to say, hey, I'm going to take this as a YOLO. And I broke even. Like I literally sold at my entry, only for it to jump right off of, I think, 84 or 85, and then ran up to $1.07. I could have gotten back in, but, it is what it is. I wasn't going to get in at 88 because I got 87.5 earlier. And plus, it was really, really like pig heavy and slow, and I have more fun with the ones that move. All right, so what am I missing so far? Gap fill stocks. Okay, we can do gap fill stocks real quick because this is easy. Someone give me a gap down stock. We can go to VTL. Not because I'm holding it, because I am, but no, let's go to, I think it's a 20-day. Okay, so here's the gap. Right here. Look at this big stick here. What did they call it in the room? This big red stick. Who was that guy that we had in our room that used to call it that? I'm gonna start doing that. But we're right here at 635. Gap right on down. Top of this one is 128. Okay. Then ended up gapping down even more. I'm not just going to go off at that. What I do with these gap down trades is this one has no pipeline left. This is don't look at the technicals or the fundamentals or anything on this one. Just literally look at the gap, and I'm just going to kind of go through it. I don't think VTL is going to go to 475 without any kind of news. Mind going briefly into what a gap is and what it implies? Definitely. Okay, so VTL, it's a therapeutics company, ended up getting bad news. Okay, and we'll see this in the market all the time. It'll have phase 3 data inconclusive, or they tank their trial, or it has an offering, or it has anything could go wrong with these things. Okay, and this is the way the market is, the way that these tickers run, is that not everything works out every single time. So with the gap, these are amazing to trade sometimes, because this is in 4-hour block. Let's go to 30-minute, 30-day. Okay, so this is a 30-minute wick here, and it probably wasn't that long. But you guys, this is the gap right here. I'll highlight it. Now, this is where stock went from $6 all the way down to $1. Okay, so this is what is considered a gap. It didn't come right back up here. There's no bounces. It was just a straight drop, and this is where it's going to sit for a bit. Okay, so what you need to look at with gap down trades is, why did it gap down? What do they have in the future to actually potentially get it back up towards this gap area, towards this part right here, which is going to be 180. But I generally wouldn't just look at that. I probably see right here. Hold on. There's like no volume here. It just went down every single day and just kept grinding down, 5-10 cents a day until it got down to the 30s. So basically what a gap is, this is a lightly traded huge gap from one candlestick to the next. So basically what this means is if it ever got to this range, okay, like to this 180, 160, whatever it is, or I'd say actually over 80 cents, probably in this range, 73 to 97. So I'd say over $1. But this entire range here, if it ever gets here, there's not really any trades in this range right here. If you guys can see this mouse moving up and down. So as it gets into this gap, there's not going to be a lot of resistance, and it has that ability, market depending, if there's a market rally, to just run right back up to this top, which would be 618, 635. For me, trading a gap, I wouldn't look at it like that. I'd look at not going to 6. I look at the 180 day. And I'd say, okay, right here and right here. Hold on. So right there. Right there. This range right here, 460 to 480, $5, somewhere in that range right here is going to be where you're finally going to start getting some resistance, because that was the bottom part right here. If I went to the 1 year, you can see it again. Okay, so this is going to be a triple bottom. I mean, it's not straight line, so don't quote me on this. This is just kind of giving hypotheticals, so don't burn me at the stake over it. But no, so this is what you'd be looking at, probably where the gap would fill at. A lot of people in stock twits and other chat rooms, they're going to say, no, it's going to go to $6.30. But I like to be conservative and say the very topmost part, depending on the news, is probably going to be like 475. And I'd probably say, 420, 450, and give an even closer price target. And this is all depending on market. Now, VTL, this is a stock that I am in currently, and I put out in our room that it is, it's definitely risky. I mean, because I mean, pennies might not be running next week, so this could easily go right back down to 28 cents or 25 cents or lower. There's nothing in the pipeline. This is strictly a chart play. And when I'm looking at it was this gap from right here. That's the one that we're talking about. And it's literally just been kind of just downtrending the whole entire time. Now, finally kind of build a base, which a lot of them do right in the 20s or the 30s. They used to do it in like the 60s and then go down to the 40s or the 50s. Let's go ahead and move this. So what I'm looking at is you got your higher highs and you've got your higher lows. It's just kind of going up. So there's a trend line if I was to draw a line here. And I posted the chart in our room as well. So looking at bottom of this candle here to right there to right there. All right. This is a very crappily drawn chart, so don't hate me. You guys can kind of see that there's a channel. It goes up, consolidates, comes back down, goes up, consolidates, comes back down, goes up. This is what I'm looking at potentially, which I'm looking here. You got 39 with 40 resistance. Then you got 44 with 45 resistance. We could possibly get 48, 49. But this is, you know, fingers crossed, hoping for it. There's nothing in the pipeline. There's no reason for it to go up. This is strictly a chart play. So I'm YOLOing 15,000 shares right now. You know, me saying that, it could have a lot of people out there that are going to say, okay, well, we're going to short the crap out of it because this guy's in it. But this is just kind of following a trend. As long as it stays above this trend line here that I got drawn, then, you know, I'm happy with it. I think my risk off is if it breaks under 30 or 31. Well, I'll probably hold as long as 30 holds because that's a psych support a lot of times. Message retracted. Oh, what happened with Sam Craig? All right, U. There's a gap on that one. Is that what you guys are saying? How old is the gap? I don't like these kinds. Like, what gap are you talking about? Is it U, or just the 3 U's? Yeah, because with these ones, this is a gap up. Okay, so whenever I'm looking at a gap, like a gap down trade, it's something that's trading in like on this one, it's trading at 350, it's trading to 4, then back down to 350, goes to 5, and then out of nowhere just tanks down to 50 cents. That's the gap from like that 350 to 50-cent gap. It's a quick gap down on a trade that is already up. So in this case, let's say that this one would be a gap down if it gapped down to like 30 cents from the dollar range. Thoughts on TRAV? So TRAV, we called out in the room. Was it on Friday or Thursday? No, it was Friday, if I remember right. This was the one that we just had. And I talked about it a little bit earlier, save 007. So TRAV is kind of another one. You've got the gap right here. This is what you got to look at. All right, so gap down from bottom of this candle, 160-ish, right down to that 94. All right, so 94 was a big level for this. And this is the other ones I was looking at, guys, that you noticed a trend. You had HSGX, you had Ogen, you had TRAV, and then there's several others that once they get past a certain point and they have that consistent volume, you could literally just sit in these stocks and wait for them to break $1. And then like HSGX was one. Where did we call that at? Like, I don't even remember. Like, it was all over the room. And then I said, okay, I know it's up high, but I'm taking a YOLO. And I knew that I bought high, but I knew where it was going to go. I just had it in the back of my mind. I knew it was going to break. I'm telling Ultra. Ultra calls one of the other guys in the room. Telling him, I'm like, dude, I already know it's going to like break 97 high a day. It's going to probably test $1, pull back to 94, which it didn't do that part. And then once it broke through $1, it's going to go 120 or plus, and ended up doing 143. So that was one that, you know, between me and him, I was telling him exactly what I knew that it was going to do. TRAV, though, it was a little bit heavier, and we've seen this in the past, how heavy this stock can be. It's kind of like the ImageA of without the crappiness. I really hate ImageA. But now, so what we're looking at here, this is what, 1 hour chart? Hold on. Let's go to the 5-day. So you guys can see right here, right here. Let me zoom back up. Right at 84 is where our scanner, static scanner, picked it up. And the scanner's free in our Discord room. I remember talking to Ultra about this. I'm like, yeah, dude, because me and Ultra, if you guys don't know, me and Ultra roommates, we've been best friends for close to a decade. We're basically partners in this whole thing. Like we traded today, every day together, and just all around good guy. But I'm about to move out, so we're gonna end up doing it over Skype. But so anyways, scanner hits right at 84. Kind of puts it on the radar, but you get that 85, 86 that I talked about earlier. That's the resistance level. Once I got over that, and this is where I took notice on it. It kept hitting the scanner. I kept it on watch, and I said, this could be good, just because it does have the gap. Ends up going to 90. I think it went to 91, 97, 92, and then pulled back. Right here, it was actually kind of awesome. Like the bottom of this candle, it shows 876. Like this is where a lot of us got filled because there weren't any trades down there, but the ask went down to 875. Yes, I'm still in VTL, Kiddo 7. So the ask went down to 875. I got filled. Several of the other people in our room got filled. And after it went back up, tested that 92, broke the 92. I'm like, I'm going to YOLO this one, guys. I'm just going to sit on this. Like it's slow enough. It's kind of heavy. There's the risk involved. But, HSGX did this. Several others did this. It's the exact same pattern, same setup. So I'm going to YOLO it. I'm just going to sit on it, And right here. No, it wasn't right here. Hold on, where the hell did we get filled at, guys? I probably got filled, I think, before it went to 92. And I said I was going to YOLO it. Yeah, okay. This makes sense now. It's a 5-minute chart. I keep thinking it's intraday. 1 minute. But no, it ends up coming up. I end up getting stopped out right back at my entry, or right above my entry. I think I had like an 8.7 or an 8.8, I think, or an 8.79. I don't know, something to take care of my trade fees. I made literally no profit on this thing. And then it ends up blowing up slowly. Goes to 107. Right now it's consolidating a bit here, right at that $1 range, 96 to $1 range. I'd like to see it hold above this. Let's see, pretty much above 97. But I mean, the thing that we got to look at is its trough. So what's the volume going to be like on Monday or Tuesday? We'll just say Monday though. What's the volume going to be like? Because pre-market low volume, it could just end up gapping right back down. I would like it to hold above 95, and I would like it to go pre-market over $1 and hold there and open up at that point, and then get that rush of volume, go to 107, come right back down. And this is where I would potentially take an entry on it, jump back in it again, higher than I had before. But what I could see happening if it holds up over $1, like in this 97 to 103 range, that at open it could hit 107, have that double top, hit resistance, come back down, consolidate a little bit, and then finally build that base to go back up. So there's potential for it to continue. But if I was holding it back here again from this 87.5, and I still had full position throughout the day, I didn't lose any, I didn't scale any, because my plan was to just literally hold this until after we broke $1 and see what happens. And I would have seen, okay, we went to 105, bounce back down. That's kind of a big gap down there to 5%, and then come back up to the 107. Hit a lot of resistance there. I probably would have taken anywhere from 25% to 50% of my position out. And then once we broke under $1, I would be like, okay, I want to wait for it to pop back up again. Sell right here, 25%, and just leave that 25% YOLO in. That would have been my plan if I was holding it. All right, got in late, hoping pre-market over 1. I mean, your risk on this, because this is a heavier stock. Do you have pre-market and after hours access? Because I think whenever we were talking about Trav in the room last Friday, we were talking how it's a really heavy stock. I mean, it's literally watching paint dry as it was kind of just making these new little highs. And I think what it ended up doing, it kept building these little ascending triangle flag type patterns. I mean, it just kept having bullish indicators after bullish indicators. So that's what kept it propping up. But oh, okay, you got Robinhood then. All right, so yeah, I mean, honestly, like I don't think you're in a terrible spot, but I mean, it's a new week, could be a new trend. You never know. Like I said, I mean, if my thought process for it, if it could hold over this, 95, I don't want it to come back down to touch VWAP here at all. I really don't. Um, but if we hold over 97, trade in this range 97 to 103, and it's probably going to be spready in the morning. Um, I do think that there's going to be an opportunity for you to sell right here close to high day on Friday. And if it doesn't break, play it by ear, man. Um, do what I was going to do, like either sell 50%, sell 25%. And this is one of the other things that I really try and push on people is, regardless of account size. Well, I guess not regardless of account size. If you don't have a huge account, it probably isn't valuable for you or viable. If that's the word, viable for you. But scale out. Like, let's say I get in a trade at $1.50. At $1.50 resistance break, and it runs to $1.80. I don't sell 100% of my shares all at once. And it doesn't matter what your share size is. It could be a 500 share size, or it could be a 500,000, 5,000, just whatever it is. I mean, if you've only got 5 shares, obviously sell all at once so you don't get raped on trade fees. But no, like what I like to do is at 10%, and this is all dependent on situation, okay? I sell half my size at 10% because that's what I usually look for, is a 10% move. If it's a market trending stock or something that's over $1 that's actually runs big, has that volume, I'll hold out longer and I'll set different, scale points or resistance points. And that'll be based on, let's go back to InBev here. Still on 5-day, 5-minute. Do I not have my lines anymore? Okay, well, you guys remember earlier, I had the lines up here on InBev. Those would be my scale points also. Those resistance levels, if as it comes up to that resistance while there's, buying pressure still on it, I'll probably take some off. It might not be a lot, but 25% or 50% of whatever I put in, I might take off if it's, 15, 20, 30% over what I bought in at. But, in taking base hits at 10%, I take half. Okay, because usually after 10% move, there's usually a pullback of some level, depending on what the stock is. And then at 15%, or depending on where I start seeing it start to slow down, the volume drying up. And I'm not saying that, like, okay, let's say this is a 1-day chart. I see this pop right here. I'm not waiting until it dries up right here to sell. I'll take another 25% off, at the next resistance point. Or whenever I finally start seeing it slow down. I mean, that's basically what it is. And then I'll leave 25% as a YOLO, and I'll put a stop loss just above or right at my entry. That way I'm guaranteed profits. And if the stock likes, if it freaking runs out of nowhere, builds a consolidation at 10% level and then just takes off, I have that opportunity to put a trailing stop loss in and make even more money potentially. And I'm willing to lose that 25% break even. So let's say I've got 1,000 shares, it goes up 10%. I just made $100. I take half off, lock in 50. It goes to 15%. I take another half off, and I lock in okay, my math is off. What we're gonna say, like, I make $80 or whatever. I'm willing to not take 125. Willing to just risk losing that. So just understand, like, I know all of you guys have probably jumped into a trade and sold because it took too long, or because it went down 2 cents, or it hit your stop loss. This is a big thing. It hits your stop loss for a 5% loss or 4% loss or whatever it is, and then runs 200% over the next 2 days. I know that's happened to everybody. Don't let the emotions get to you on it. You can't win them all. And as long as you guys are doing your risk management and doing everything properly, it will save you more times than it will help you. I promise. Why hasn't my size released who they are partnered with? I have no clue. To be honest with you, I have no clue why some of these companies do what they do. Um, and I noticed that you guys, a lot of the people in the room were talking about my size. Um, I haven't looked into it too much, honestly. All right, Sabe. Here's another thing though. Um, saying that you have a problem where if you don't gain 10 to 20% on a trade, it's a failure, being that you're limited to PDT, the pattern day trader rule. Um, oh, shit. I think I just lost my train of thought slightly. Um, now, has that been a problem where it gets to 8% or it gets to 5% and you could take it, but do you sit there on your hands hoping for it to go that distance every single time? And has that ever ruined you in a way? Like, let's say that you lost a trade because you held too long. Like, don't be afraid to take, a 2% win and just pay your trade fees rather than hope. You know what I mean? And I'm not trying to overreach here and assume anything because I don't know your trading strategy 100%. And I get it with, being on PDT, you want to make that, every single one, you always want to be good. Exactly. I always feel it can go more than I end up losing. So you end up losing more than winning. Yeah, it happens. Like honestly, like don't trade on hope. And this is where I always say, like, let's say you got a perfect setup, okay? And I remember I used to, whenever we founded Limitless way back in the day, we used to push, bid support plays that ride in a channel, okay? Because some of these patterns, I mean, you can easily tell where a stock is going to go before the stock knows where it's going to go. And so taking advantage of those ones, and you could have that super tight risk management where you get a spread that is, 30 cents with a 200K bidder. Okay, that's on the bid. And then on the ask, it's 0.3001. Okay, so your risk is 0.0001 cents per share, which is literally nothing. I mean, you put in 10,000 shares, and if you're on U stock, that's $1. Like it's nothing. Um, and so we always used to, say, hey, look, these are the type of trades you want to look for. Don't take the ones that are $1.50 and $1.85 on the ask. A 35-cent spread. Those are ridiculous. Like I don't ever want to sit in something and be down 35 cents as soon as I buy it. So you try and get that perfect entry. And a lot of traders, they see something going and they're like, oh well, shit, I'm going to market buy. End up getting screwed. Um, I just went way off topic, didn't I, man? Apologize for that. Um, so I guess base rewind here. What I was trying to get to was, don't be afraid to take, base hits, take your 5%, take your 10%, 15, 20. Don't trade on hope. Don't hope that a stock is going to go. If it starts to look weak, I mean, just start scaling off, man. I mean, if you're putting 1,000 shares in and you see it's a 30-cent stock and goes to 31 and then starts getting weak and you don't think it's going to go anymore because there's no news or whatever it may be, just go ahead and sell. Like take some profits right there. I mean, 1 cent's 1 cent. I mean, if it's only $5 that you're getting, it's five more than you had. Then you run into the worst feeling where, then it runs 20% and you're not in it. And I know that that's what you're thinking, but that's trading with emotion. Every stock that you take is not going to be a winner 100% of the time. You're going to take losses. And, if you start trading with emotion on that and hoping that a stock is going to go, you're going to trade with the same mentality whenever you're losing. You're not going to stick to your risk management. You're going to get the emotional side of it. And you're like, no, it's going to bounce. Like, I don't want to take a 5% loss. Before you know it, you're down 15% and you're still holding. Then it's down 20%, 25%. And you're like, what the hell is going on? I don't know what to do. And you're stuck. You're stuck sitting there. And that's where emotions can get the best of you. And then a 30% loss is extremely hard to make up. I mean, it's not something that's going to happen in the same day. So, yeah. So, like I said, I mean, just be a robot with this stuff, man. I don't think I've ever said that, but I said it now, so that's a saying that I say. No, but no, just have your risk management, go into every trade with a strategy. And this is where like pre-market, I don't trade pre-market. I wait until open. I make my first trade. I make sure that it's a green trade. And that's not going to happen every time. And you guys have seen in the room, I've had some calls. I mean, we all have that just out of nowhere tank. Like I remember one specifically. I don't remember the name of the ticker, but no, it was GTXI. It was freaking GTXI after it gapped down, and it was right at 180. The bid was 183 and the ask was 184. You had like 1,500 lot on the ask, right? Like it was thin. All right, 1,500 lot, and then you had like 70K at 183. You had 80K at 182, and then all the way down to 180. You had like 400,000 worth of bids, right? And it was a multi-bottom off 180. And here's what happened. I posted on StockTwits, and you got people that want other people to fail. I've got several thousand people following me, and a lot of our members do. And sometimes you post something up that looks perfect, and everyone's like, "No, we're going to screw you over." And I swear this is what had to happen, because I would have taken this trade 10 out of 10 times with 400K worth of support. And I remember getting DMs from people because I felt terrible, because I mean, it sat there in that range for a good 10, 15 minutes. And I know that a lot of people were doing DD. They were looking at the chart and they were buying in based off the alert that I gave. And then that thing just tanked. It tanked real quick. Went down to like 160, faked a whole bunch of people out and instantly came right back up to 180, like within 15 minutes. So a lot of people lost money on it, and only to have it come right back up. So it's all about trying to find these perfect setups and these perfect trades, and then rolling from there and just hoping it pans out. But once it gets to a certain point, you got to take that hope out, take that emotion out. Just be like, trust your gut. If you have confidence in it, then be confident. But this is money on the line. This isn't gambling with candy at a Halloween party. This is your life. This is your account. This is your financial freedom that you guys are risking. And if you take these smart trades and take these base hits, know when to get out, know when to sell, I mean, you guys can increase your account. You can be right 2 out of 3 of your PDT trades, or 1 out of 3. I mean, if you keep that really tight risk management where it's like a 2%, or like I said, risk 5% for 15%, but you're not always going to get that 15%. So, you don't have to win every trade, but just make sure the ones that you take are not taken on emotion, not taken just because someone called it, because they bring volume into the market, because that's the thing. You'll see a lot of the trades I called, okay, they fake me out. AMMA, let me pull this up, okay, because here's one that hit the scanner, and after I alerted in the room, we had BSS on it, we had AC Investor on it, and a whole bunch of other social media attention on AMMA as an IMPX sympathy. Okay, Friday we had IMPX running. Okay, you guys can see right here. It's kind of like a multi-day kind of thing, consolidation here, another 17-cent ticker. Surprised IMPX didn't run higher than it did based on what we had in the market. All right, but this thing is running on Friday, midday, end of day, all day. All right, so AMA hit the scanners at like 27, or no, at the break of 28 cents. All right. Hold on. Am I going to record these sessions and upload them? It's already uploading right now, I think. I mean, you guys are able to watch it live. I mean, it's going to be on my channel on YouTube. So if you guys just subscribe, you guys will be able to get in here. All right. So no, I got the 5-day, 5-minute. Okay. We'll just go off the 1 minute. 20-day, you guys can see 38.5, 39. I mean, a lot of these that go down to like 20s or whatever. I mean, $40 or 40 cents is always going to be a tough one to break. And you got 33. And this is what I was looking at, this range right here. Okay. Because it's AMA. And if you guys know anything about AMMA, it's a pop and drop. I mean, it's a lower flow. It's highly volatile. It's just strictly going off of, pennies moving. It's penny mania. It's Friday, and it was hitting the scanners. And what I've seen all week, the last 2 weeks, is that once the stock breaks 30 cents, it takes off. Whether it's to 31 and comes right back down, 33, 36, 50s. I mean, it's literally all over the place. So go to this 1 day chart here, and I alerted it in the room. The scanner alerts it right at that 28 break. I see it right here. I see it coming up to this 29, and I'm alerting it like, watch for a 30 break here. All right, I don't remember what I said. I think I added at 30. And it might have just been like, hey, AMMA, it's another penny mania candidate, worth watching. And there was different opinions in the room on this, and I'm glad that we had this. And this is why our room is great. It's not all everyone saying, oh man, it's going to the moon, it's a freaking rocket ship and this and that. No, you got people, well, be careful on this one because it does like to pop and drop, and it's true. Okay, so here's what happened whenever I traded it. I got in at 30. It was getting resistance right here at 31. Finally broke it, went to 33 real quick, and then you start seeing, a whole bunch of like, if you guys are watching level 2 time and sales, you can start seeing where stock's going down or going up. I took half off at my 10%, right? 30 to 33 cents. I sold 33 cents, half my shares. It started looking weak. Okay. And a lot of the people in the room were saying, yeah, this is a potential for it to drop back down. And I'm looking back at how it was just 26 cents or whatever it was. So you guys can see it's kind of volatile for a penny to be moving this much this quick. So I end up backing out the other 50% at my entry right at 30. So I made basically 5%. Okay. Even though I made 10%, but okay. So I made 10% with half my shares. Then it ends up running right towards end of day. We hit power hour. Right here's 3 o'clock. Ends up just running up to 42. I missed out. I don't feel bad. I traded with a strategy. It hit my resistance point, bounced back down, looked kind of weak, like it might go under. I didn't want to end up selling at 28. That was a big thing. And then only make like a tiny amount. So I said, I'm just going to lock my profits. It is risky. A lot of the people in the room, they held through. They got 40s. They got 39s. They got 38s. People made, 25% or more on this stock, even though I didn't. And here's what I want to talk about with this, guys. Is that just because you miss out on these things doesn't mean that you're going to miss the next one. Doesn't mean that you need to hold and hope for that next one. Because, just trade your strategy. I didn't trade this the way that a lot of you guys did, and I didn't make as much as you, or I didn't make as much percentage-wise as you. It doesn't mean that, I traded wrong. I traded a strategy. And as long as you stick to that, there's no reason you should ever feel bad about it. The only one I really feel bad about, and not even that much, was IGC. Colin has a swing at 49 cents, and then it runs 2,400%. I literally, I can tell you, I never thought it would do that. Like, I figured we go up to, 80s to $1. If we broke $1, we might go more than that. That was such an exponential thing. And don't always think that trades are going to be like that you're going to get that one, that you're going to get that lotto play, and you're going to wake up 6 figures the next day. Like, don't trade with that mentality. Trade with a mentality of just take your wins, take your base hits, and I promise you, you will get financial freedom. It may take years, it may take a long time, but if you keep doing that, you're learning every single time that you're doing it, and then eventually you can be more aggressive and you can be making those bigger wins. If you've got a 1K account, if you can make $50 to $150 in a week on PDT, then you are great. That is awesome. But just $50 week 1, and then bump it up to 65 week 2, and then 85, and then 100. By the time you get to that 3K mark, you're making, you could be making $100 on a single trade, or you could be making 500 on a single trade if you get lucky. But conservatively, just increases. It doesn't matter. A green day is a green day. Okay, red days usually are bigger than green days. So just concentrate on getting those green days and minimizing your risk. But it's extremely tough if you're under 3K or under 5K even. It is extremely tough on PDT for you to actually have exponential growth. It takes a long time doing that way. And that's, for my account challenge I did back in the day, we used stock trade. It was just simpler. I could have, like, I hate stock trade. You have limited liquidity, like all these stocks like AMA that I start seeing it set up, or whatever it is, HUSA, I start seeing it set up off at, 20 cents. I can't buy in, and then I have to wait until it's 30 cents to buy. But no, I mean, just look at the account size. Don't think that you're going to make 10% on every single trade if you go all in. Diversify your account. What I suggest if you have under 5K is just do swings. Hold something for a couple days, see the market trend, the strategy that I was talking about, and then just go from there on it. All right. This is an extremely long video already. What do we spend an hour and 25 minutes? Does anybody have any questions on anything? Yeah, I think we pretty much covered everything, and I don't know who's going to actually watch an hour and a half long video and maybe learn one thing that they didn't already know. I mean, can you move in? No, man. I need my personal space. I'm actually about to move out. So I don't think I can live with anyone. Um, Here's one thing. I know a lot of these bigger rooms, and I don't know how many members we have. I think we have like over 3,500 members now. Um, no, but a lot of these bigger rooms, they end up doing conferences in Florida or Vegas or Cali. Maybe next summer or at some point in time we might do something along those lines. We'll get together. We'll just have a meet. I guess I don't know. That way, maybe some real time trading. Who knows? Just kind of sit down with you guys. That way, it's kind of face to face, and we can work on what you guys feel that you lack on. If you put too much emotion into trading, and you guys want to know how to get rid of that, or if you want to know more about technicals or more about your fundamentals, like how are you able to read these chart setups? I mean, we've got the education room. Hold on. So right here on Discord, I gotta look at those messages in a second. So you got your announcements rooms, you got your questions rooms, team chat, different alerts here. You got news, options, shorts, swings, day trading, your trading chat floor here. So this is full of just different people that are posting it. Different charts are asking for advice on this one or that one, and just rolling from there. I mean, I highly recommend, if you guys are looking for a room that is completely free, has a free scanner. This is provided by Static, who's freaking awesome, and kind of is very diverse. I mean, you got a lot of these rooms out here. We try and keep this as lightly cluttered as possible, but no, I mean, the education room here, strategies, terminology here, okay, chart patterns, and this is ridiculous. I think Alfie, we got Ripster and Static, and like all the guys that like have these, whether it's green, blue, whatever it may be, like different roles in here, like they go out of their way just to make sure that you guys are set up. So I think everyone that's in here watching the video right now is probably, as far as watching live, is probably in the Discord with us already. But and then also every once in a while, I mean, most days I get on pre-market and I kind of get on this live alerts and scanner tab, and I roll through and just kind of talk through a couple trades. It's not every single day, and then throughout the day, sometimes I get on and I say, here's what I'm looking at. Market's good, market's not good. I'm looking at this trade for this reason. But no, you guys can check it out. I think that's my little I don't know what it's called. That's my own advertisement, I guess, for our room. I'll get back here. Check these messages. ETL with a reverse split. All right, guys. So, any questions? Yeah, C speed, yeah, man. Like I said, like for whenever I am on voice during the day, I know you guys are sending me DMs, and you definitely post up that you're appreciative of it. I mean, it's yeah. I try to do it more and more. And over the last couple months, it hasn't been on as much as I would have liked to. But no, I mean, I will try and do it every single day. It's just, whenever we have these like green weeks with the pennies. I mean, you guys, I talked about MNGA. I told you if it goes under 50, it's probably going to go down to like 43 before it bounces again. I mean, talking through some of the ones like that, I mean, that's what I like to do. I like to actually talk through, make sure you guys can see what I see through my eyes. That way, from an educational standpoint, I think it's beneficial to everybody. And whenever it helps me build my confidence also whenever I'm actually coming out here and I'm posting up something like, hey, it's going to bounce off 50. If it doesn't bounce off 50, I look like a retard, um, no, but no, I'll try and do it a lot more, just to for the benefit of you guys. Just being on there all day, like some of these rooms, I don't know how they do it. Me and Ultra calls, we joke around. There's a kid around here also, so a kid gets loud. But yeah, but hopefully the session helped you guys out. I won't be able to do one next week, but I will try in 2 weeks from now, either on Saturday or Sunday. Same thing. I'll broadcast on YouTube live and then make sure it's uploaded afterwards. So enjoy the rest of your Sunday, guys and girls, and yeah, hope to see you in the room.